What's up, guys? Sam calling in from, unfortunately, a pretty rainy Chicago. I'm here for the week, so I've been checking out my deep dish, and I wanted to call in on this Friday evening. I want to see what's been going on in the markets this week, give you a little bit of an update on some of the stocks that I've been watching with some interesting technical analysis. So kicking off as usual with the S&P, we can see that this descending trend line and the uptrending trend line made this wedge that we've kind of been identifying for the last couple of weeks, and we had that breakout last week. And the big concern I had is that it was going to kind of test to 720 to 750 level and fall off. But we're seeing some consolidation, which is exactly what we really wanted to see. So it's moving out, it's forgetting about all this range. We want to see it base off here and start making that move then for the 2800 level. Coming in a little bit, we can see there's even a wedge forming on this side of things. So we're seeing some higher lows here, and likewise up on the high side, some lower highs. So it's going to come to a decision point at some stage. Probably it's going to be Monday or Tuesday, most likely. And no reason why we won't see higher moves after having this consolidation. So everything good from a technical perspective on the S&P. One of the biggest stock movers on my watch list this week was AGRX, and this is a stock that I was involved in about 2 years ago when I was playing the bio run-up game. So I was really surprised, and I felt bad for the guys when I saw that they had, unfortunately, awful results with the FDA this week. And the biotech's been grabbing the headlines with the ASCO conference coming up next month. So I've been kind of dipping the toe back in and just seeing what's been going on with some of those familiar names. And unfortunately, AGRX got absolutely slammed today, down over 70%, back into penny stock status. And just even checking out on a 1 year time frame, we can see that it's no stranger to these gap downs. Let's see, what are we talking here? Back in 2016, late 2016, we came off 70%. Last July, came off 40%. Start of this year, we came off 60%. And here's today, I think about 70 today. Yeah, nearly 80. So it's not a stranger. Obviously, if you're going to be involved in a stock like this, particularly in a biotech, you got to be aware of these risks. It's very event focused, it's very catalyst focused, and it's binary, so it's either good or it's bad. And obviously today it was not good, it was very bad. Now, as a lot of you will know, I'm a fan of the bounce play, and I already talking agile here. They're on my radar for that kind of a reason. We have the RSI down around 10, which is extremely oversold. And if we consider what it's done on the previous times that it's had these massive gap downs, we'll see that it's actually been a decent buying opportunity some of the time. So it ran 180%, 175% last year from these lows. Around 70% from these lows last summer, and even earlier this year, around 100% within a couple of weeks. I'm not going to begin hypothesizing where we're going to go this time. I do think there's an interesting setup for those that enjoy a bit of risk and want to see some potentially eye-widening returns. So here's the lows. We had some very hard selling off the open, hit a base around 60, tried it, didn't create a run past it, so now you're thinking, okay, look for an easy 10, 20, 30%, anything that's going to get you back up towards the start of that gap. And there's a strong 10% run, and it held that move back up into the close, so it'll be really interesting to see what it does on Monday. And if there's any potential for it to get towards the one, I mean, that'd be nearly a 40%, 50, even more. Are we talking 70% would get us up towards $1. And then we're talking this gap. So look, keep the risk tight. You don't want to see it go below 60 cents, and you'll have that cascading waterfall effect. If you enjoy the bit of risk, nothing wrong with seeing about that bounce play. Snap is another guy that I was highlighting last week. It's holding the lows now. It's not giving any kind of a higher highs here like I was kind of expecting, but it isn't quite giving up in those lows just yet. And the 5 minute as well as showing us some interesting action. So going back over the past week, we can see 1050 has been hit a couple of times since it came off after earnings 2 weeks ago. So it's holding very steady, and as even this week then, it was playing this kind of 30 cents range. So once you want to see these two to highs taken out, start thinking about the mid 11s. And again, just as with AGRX, you don't want to see the 1050 taken out and brand new lows. That'll just scare absolutely everybody away. Anyone who's taking a chance of a long here will be dumping as well. The last person we're going to be looking at is PayPal. Let me clear off some of this. So PayPal's a stock I highlighted during the week that was looking pretty strong from a technical perspective. It was holding the support line down here. Now, while it had a descending trend line, so it was setting lower highs, the difference that I thought was going to be important on this occasion, once I got up towards the top, pull up the daily, was that it was coming off such a strong momentum bounce. So despite coming off it around here, there were some red choppy days, came up some red choppy days. It was just kind of staggering up, came off. Again, it kind of bounces some choppy. It wasn't really strong and big red candles back down. But here we had 1, 2, 3, 4, 5, 6 big green candles up, and then a blowout past it yesterday, followed by another very bullish action day today. It had some very positive merging news. It's going to be taking on Square with the online payments in that industry. So in terms of holding on to its gains today, again, we want to see the $84 level being tested next week. You don't want to see the $80 level being given up. And we'll be back into this range with probably 72 being tested if it doesn't hold on here. So some interesting food for thought over the week. As always, keep your wrists tight, have your plan, trade your plan, and we'll catch up next week, guys. Happy trading.